Welcome back to Withum's video series, The Alternative Route. Today we have our very first recurring guest with Eugene Tetlow, co-founder and CEO of V17 Advisors. Eugene, thanks for coming back to talk with us on what you're seeing in the VC space from the latest data in Q2.
You're more than welcome. It's an honor to be the first recurring guest, and I'm excited to be back.
Thanks for coming. Major milestone here. So let's start with the fund formation numbers. When we last spoke, we were looking at Q1 and the number of new funds with successful close. And it was under 100 for the first time in nearly a decade. So how does Q2 compare?
Yeah, I mean, as you mentioned, Q1 was pretty bad. There was only 87 funds that recorded, having a successful close, and that was the lowest number, for a long time before the pandemic. There was macro level factors in play in Q1. There was a switch from the Democrats to the Republicans, for example. But what we were looking for in Q2 was a rebound. We really needed a rebound. And the good news is that we got that. Q2 saw a near 75% increase in the number of funds with a successful close. That number was 151. And even more encouraging is that Q2 was the second highest quarter for a number of funds with a successful close since the fourth quarter of 2022. Now, obviously, Q1 was really bad. Q2 was better, but that's where we want to be going. So, a good numbers in Q2.
So that's a good sign. What about the capital raised by those funds?
Yeah, so there's, if there's more funds, typically there's going to be more capital because there's more funds raising that capital. So we saw a 75% increase in the number of new funds. Then the amount of capital raised by those funds saw only a 66% increase. So what that basically means is that the average fund size was down to about $110 million. This is really good news for smaller managers, fund ones, fund twos, and it's kind of in line with what we've seen in the last couple of years. So the 16.6 billion that was raised in last quarter is good, but I want to give like a sobering data point as well. 2024 saw two quarters with over $25 billion raised, so we're still playing catch up, especially after Q1's poor numbers.
What are you seeing in deal values? I know Q1's numbers were boosted by the OpenAI, and how did Q2 fare after that?
Yeah, it's not every quarter that you get an OpenAI size $40 billion mega deal, so Q2 is always likely to be lower. The good news is that Q2 was the third strongest quarter since the second quarter of 2022, and that 71.3 billion, it was significantly up on the second quarter of last year, which saw only 56.8 billion. So overall, good numbers on the deal value side of things as well.
So then let's turn our attention to exits. What did the second quarter bring in that area?
Again, more positive news on the exit front. There were a total of 354 exits and 64 billion in exit value. That's a 14% increase on Q1 and more than double the Q2 of 2024, which is only at 30.6 billion. However, if we dig below the surface a little bit further, the valuations kind of remain significantly depressed. Nearly every major public listing in Q2, including Chime, Hinge Health, MNTN, Circle, were all priced well below their peak private valuations. And unfortunately, kind of down round IPOs have become the new normal. There were some bright spots. Voyager Technologies and IPO and Circle's post-listing surge indicate pockets of investor enthusiasm for sectors that are aligned with federal priorities. These include like crypto and national security.
Maybe moving towards tariffs, I know we're still seeing how that's unfolding and impacting numbers. How did that impact the Q2 numbers?
Yeah, I mean, as you can imagine, there's a lot of uncertainty, and April's Liberation Day, tariffs triggered sort of a brief market jolt. But most of the major exits in Q2 occurred in sectors that are kind of insulated from policy risk. So we saw, AI, defense, and fintech. In terms of sectors that are lagging, clean tech and consumer seem to be lagging behind, as we could probably expect with the tariffs and the change of the switch from Democrats to Republicans in the White House.
I'm sure we'll see that continue to evolve. And what do you think we should be looking for in Q3?
So I always want numbers to go up. So and this has been a good quarter in terms of those numbers going up. So a further continuation of broad kind of macro numbers going up. But I think in particular, we want to see whether or not AI's gravitational pull will support the rest of the venture ecosystem or whether it will just crowd it out. Venture can't just be AI, so we want to see other sectors kind of jump up as well. We also want to see whether the IPO pipeline can expand past defense and crypto and AI. And finally, although Q2 had much better fundraising numbers than Q1, we're still on track for a very poor fundraising year. So seeing an increase in the amount of capital raised by funds in Q3 would be great. And yeah, I think those are the main things that we're looking for in Q3.
Well, thank you, Eugene, for joining us. Always insightful. And stay tuned for our next episode of The Alternative Route.
Thank you.